You know when the price shoots up too fast, like an elastic band stretched to its limit and then snaps right back to its equilibrium point? Well, that's the famous mean reversion. And today you're going to see an indicator that turns this idea into a simple and clear visual. It's the mean reversion probability zones by Big Beluga, one of the most intelligent scripts for detecting when the price is stretched to its limit and is about to revert. So if you want to trade any market on TradingView, this indicator could change how you see extremes, reversals, and timing. So let's jump right in. The very first thing we're going to require is to open any chart here for an asset that you particularly enjoy to trade. I'm currently looking at the BTC/USDT, which is the Bitcoin cryptocurrency on the 15-minute chart. You can also effectively utilize it across any given time frame. Furthermore, you will need to navigate to the indicators section and specifically search for mean reversion probability. And it'll show up right here, see? The mean reversion probability zones by Big Beluga. Just click on it and it will appear just like it is here on my screen. Within the settings, it offers crucial details such as your preference for using the RSI, MFI, or stochastic as the fundamental basis. In my case, I use the RSI. The RSI is smoother and more predictable. The MFI also includes volume in its movement, and the stochastic is faster for sideways markets. It's up to your perception. Typically for the period I use 14, and for the bands I set the upper to 70 and the lower to 30. It doesn't come with these settings, so if you want to add them, feel free. So what does this indicator do? It takes an oscillator like RSI, MFI, or stochastic and transforms these readings into reversal probability. It gives you this data in three formats at the same time. 1. A histogram below or above the oscillator. The upper histogram effectively highlights the likelihood of a downward reversal. The lower one indicates the probability of an upward reversal. Two colored zones on the chart. It visually highlights areas where the price is stretched, indicating a tendency to reverse from those points. And 3. A mini panel. It shows recent extreme values so you can understand if the current move is really strong or just noise. With this you see the stretch, direction, and context in a single glance. And now I am certain you are eager to learn how I effectively utilize this indicator for trading. Before we continue, a lot of people ask me which platform I use to access the Forex, stock, and cryptocurrency markets. I personally use EXNESS because it offers very fast execution, extremely low and competitive fees, and a simple to use dashboard. It's the platform that best fits my analysis style and workflow. If you want to check it out, I've also left a link here in the description. I use it in conjunction with Bollinger Bands, so let's navigate to the indicators section and search for Bollinger. And right here, this option Bollinger Bands will show up. We click on it and our Bollinger Bands will emerge, which clearly indicate when the price has extended significantly both downwards and upwards, making contact with the bands. Therefore, when we are looking to make an upward entry, what exactly will we require? We will need to observe the price as it enters the lower section of the Bollinger Band, or even breaks through it, which is actually the most favorable scenario, just as it occurred here. Following that, the appearance of the green squares will begin, much like they did at this very moment, right after this specific green quadrant makes its appearance here on the chart, indicating a possible mean reversion from the Big Beluga indicator. We'll wait for the first green candle to appear, see? After the squares started appearing here, the first green candle was this one. Thus, this would be our position. We'd place our stop loss slightly beneath the low of this specific candle, roughly at 0.61 or perhaps 0.60. Our target for profit would then be positioned at the central moving average, that distinct blue line within the Bollinger Bands. That would have resulted in a 1.09% take profit. For a sell, it's essentially the same, just the opposite. You'll notice the price has broken past the upper Bollinger Band. The Big Beluga indicator started to flag a reversal precisely on this very first red candle. You can see it by the yellow square up there. There was a high reversal probability from this point on. So since this was the initial red candle, we would enter our position precisely here. Our stop order would be placed just above the high point of this particular candle, approximately at 0.56, with our target set at the moving average, yielding a return of roughly 1.45%. A few quick tips. Always compare the histogram to the panel's peak values. A 40% reading can be huge, or it can be a common value. Always respect the current market trend. If the oscillator is still rising powerfully, the price might not have touched your desired zone yet. In strong trends, aim for smaller targets. Reversals still occur but are typically briefer. This indicator really shines because it combines math, visuals, and simplicity. It doesn't make you guess. It shows when price is overextended and a return makes sense. If you enjoy objective, probability-based strategies like these, subscribe to the channel, turn on notifications, and leave a like to help out. Also, comment more indicators to let me know you want to see more analyses like this one. And remember, this content is educational and does not constitute a recommendation to buy or sell assets, much less to use the indicator. The financial market is risky and you could end up losing money. So if you don't feel confident trading, seek help from a professional. That's it for today's video. Thanks and see you in the next one.